Hi, welcome in the channel. Today we're going to talk about the overall cross-border e-commerce and what you should keep in mind when shipping internationally. Before we go ahead, remember to subscribe to the channel and leave a like and a comment if you enjoyed the video, because this is going to help us grow. So, let's recap and understand what is the cross-border e-commerce. Cross-border e-commerce is when you actually ship something from one country to another, and there are duties, taxes that you need to pay on the products, on the shipment that you're sent. And of course, there are other regulations and requirements you must meet when shipping internationally. Let's start with the scary thing, taxes. So yes, when you ship cross-border, there are taxes to pay and tariffs, which means duties. Now, you need to assess how much you're going to pay in terms of duties based on the HS code that you actually chose. So the HS code, to recap, it's basically a code associated to the type of products that you're selling. So there are more than 5,000 HS codes worldwide. There's a general database, and then every country has its own system, which is still based on the general database. And sometimes they have subheadings or subcategories where it gets a little bit more specific. So they may have duties compared to other countries, or they may not, in that specific type of product. There are different ways to assess the HS code to understand which HS code needs to be assigned to your product. You can contact experts, you can contact custom brokers, or let's say the one that will give you 100% guarantee, you can actually request a verification from the custom officer, from the custom clearance, let's say, of the destination countries where you ship to. They will be, let's say, the best party to assess your HS code. However, if they actually release an official letter, you must use what they suggested you. So you have no right to change it anymore. So if they tell you need to pay 8% duties on that product, you're always going to be 8%. It's always going to be 8%. Let's say that you now use an HS code that has, for example, a 5% duty on it, but if they issue a formal letter saying that your HS code is different and you have to pay 8%, then you will need to pay 8%. And that means that you actually need to change maybe the prices you sell the product for and so on, because you need to kind of take in consideration that now the duty percentage is higher. So maybe it's just worth it to ask for a formal approval right from the start. So once you figure out your HS codes, you pretty much also figure out the duties that you need to pay on it. And then you have the taxes. So every country has its own system and its own way to tax products that are imported. For example, Kuwait doesn't have any VAT or GST, any sales tax, most likely only duties. Hong Kong doesn't have any duties, doesn't have any taxes, only excises on, let's say, alcohol and tobacco, so it's duty-free and tax-free in Hong Kong to import anything here. But also for Canada, for example, it's a little bit more complex, because you have the GST, goods and services tax, that is 5% and applies on the value, on the chief value, basically, plus duties. But also you have a provincial tax. So on top of the 5% that you pay on GST, you actually need to pay maybe 7 or 8% or 15% as a provincial tax. Then we may think about Argentina. Argentina has a lot of taxes, has the VAT, the general VAT, the additional VAT, then they have like a processing fee or something like that, which is fixed. They have a lot of kind of taxes that apply on your import, and it may be that there's no tax to pay, there may be that there is just GST or VAT, let's say, to pay, or there may be multiple taxes to pay other than the duties. So make sure you understand the duties and taxes. Another thing will be how you're going to ship there, by courier or by mail. So there are some countries that actually give more, let's say, advantages on shipments sent via mail, which means postal services, rather than couriers. There may be a threshold, there may be some, let's say, informal clearance or anything like that for shipments sent via post. Let's say duty-free or tax-free if you send via post up to a certain amount of declared value, and definitely is not, you have less advantages when you ship via courier compared to post. But there are also countries that treat them the same, or countries, as I said, that treat them differently, so that you have more advantages if you ship them via mail. Or overall, you need to also think about the DDP or DAP Incoterm, like how you're going to ship them in terms of Incoterms. So DAP means duties at port, so your customer will pay for duties and taxes as soon as they arrive in the destination country. And DDP means duties and delivery paid. That basically means that you're going to pay in advance duties and taxes so that your final customer doesn't have to pay them. So it's an all-included price that you offer. But you also need to keep in mind, if you go for DDP, there are also countries that don't allow DDP at all, like Moldova, for example. They do not allow DDP shipments to be sent there. You can only ship in DAP. So you must know the regulations in that case that, let's say, allow or not to apply DDP, let's say, Incoterms on your shipments. Another thing to keep in mind are the VAT thresholds. So for example, now I'm going to talk about, let's say, local currency. So every time I mention a country, the amount that I'm going to mention is in the local currency, okay, just to make it easier. So for example, when you sell to Australia cross-border, you sell more than 75,000 worth of goods there in terms of sales turnover, then you must register for a GST number. So up to 75,000 Australian dollars, you don't have to register for GST. You can sell, let's say, cross-border. If you sell more than 75,000, then you need to basically register for GST in Australia for a GST number and remit the GST from time to time. Or for example, for New Zealand, it's around 60,000 New Zealand dollars. For Japan, it's like 10 million. For South Africa, is $1 million. For Norway, it's 50,000. For, I think Switzerland is 100,000, something like that. So basically, if you go above the turnover, sales turnover of the threshold that each country has, you need to register a local GST, basically, or VAT number, it depends. So there are different aspects in terms of formalities that you should keep in mind. It's not only the fact that, oh, okay, I'm going to ship DAP, so the final customer pays for it. Even if you do that, you actually need to give an estimation to your final customer how much they're going to pay in duties and taxes. And also, if you sell more than a certain amount into a country, you should register for the GST or VAT. How you're shipping there, if it's via email or courier, different regulation may apply. The product regulation, if it's prohibited or not. And then at a certain point, if it actually makes sense to ship some stocks in the destination country directly and ship locally. So we don't talk about cross-border anymore. We will just talk about a domestic sale, basically a domestic shipment, because you sell from, within the same country. Now in the United States, for example, you need to keep in mind that even if you import for commercial purposes, then you also have some state-based sales taxes to pay, and that's the same logic. If you sell more than X amount worth of, let's say, of goods into a specific state, you may need to register for a sales tax number and so on in a specific state. Same in the European Union, that was the case up to last year, basically for July. Above the threshold, maybe 35,000 or 40,000 or 100,000 for Germany, you need to register a local VAT in that country, even if you were based somewhere else, for example, in the European Union. That's a bit different with the, let's say, new regulation from the 1st of July 2021. But pretty much that's the logic. But also, when you ship cross-border, you should understand the regulation in terms of deliveries. For example, in Russia, you can really deliver by courier to private addresses or residential addresses. You can do only to business addresses for commercial purposes. There's some regulation around that, and you can ship via post, for example, EMS or, let's say, speed post services to private individuals, but there are also some thresholds there. In terms of, let's say, duty-free or tax-free. For Russia, something like 200 euros, and for United States, it's 800. For Canada, it's 20 Canadian dollars. But you also should keep in mind that there are free trade agreements among countries, like it's the case for the United States, Canada, and Mexico. So they have a free trade agreement among them all. So they have, let's say, a preferential duty rate, or they have no duties at all. They are due on the products, or lower taxes, or higher thresholds, so they can ship duty-free and tax-free. And that can happen with any other countries worldwide. You can have a free trade agreement, between your country and the country you're shipping to, and so maybe your product is duty-free or you pay less duties, and that's something you should also check. Another thing would be that when you import, for example, in the European Union, you may not need to pay the VAT on the spot. There are some countries that allow you to actually import because of those treaties, international treaties or country-by-country treaties, where you can actually import without paying the VAT at the let's say at the time you import at the border. You actually pay the next quarter, for example, so you avoid this huge cash flow. You can use bonded warehouses, which means that you can import temporarily into a country and it's gonna stay, let's say, with the custom in a way. I mean, there are also private companies that offer bonded warehouses. They're very close to customs. Yeah, a bonded warehouse is something that is controlled also by the customs, so they will keep an eye on you. There are some, let's say, regulations and rules you must follow when you offer a bonded warehouse solution that allows you to import in the country, to store the goods there without paying duties and taxes, and you only pay them if you actually do the custom clearance. So what you could do, you could import in a bonded warehouse, let your goods stay there, and then once you sell, you custom clear one unit one by one, basically every unit one by one, or you import in bulk a few units per time, so you pay, let's say you have less cash flow, you always need to pay VAT overall at the end of the day. But the purpose of bonded warehouses is also for the fact that you may import to a country temporarily, because then you need to export it again to a neighborhood country or something like that. So maybe, you know, you pay less in terms of storage in Bulgaria, but then you need to re-export in, I don't know, Romania or Italy, for example. Then you keep the goods there in a bonded warehouse, so you don't have to pay duties and taxes to the Bulgarian government, but then you're going to export again, so nothing will be sold in Bulgaria, but it's going to be sent to Italy. So why would you need to pay duties and taxes in that case, right? So there are those type of regulations that you can use, but of course everything depends on your case, so please look for let's say an expert opinion on that before doing anything else. And that's all for today. Thanks for watching. If you have any questions, just leave a comment and leave a like if you enjoyed the video. Make sure you also subscribe to our channel if you want to be kept updated on the latest regulations, news and videos that we're going to release. Thanks for watching. That's all for today. If you enjoyed the video, just leave a like. If you have any questions, leave a comment, and make sure you subscribe if you want to be kept updated on the latest regulations, news and videos that we will post. Thanks again, and see you in the next one.